Hello, how to swing trade upward stocks, long uptrend line strategy for beginner. So we are going to have our watch list here, and we have three stocks we can analyze together using our uptrend line swing trading strategy. So the first one is CBRE. We have Thinkorswim platform open that we use to analyze our charts, and we are using maximum daily chart. So CBRE. I have not purchased CBRE yet. It is the first time it was on our watch list for 2025, and it has been on it for the whole 2025. We have the date on the x-axis, and 2025 is from this dotted line to here, and then we have the price on the y-axis. And as you can see, we have the purple line that we color code to be our entry point. So our long uptrend line strategy consists of you drawing your support line, passing by the valley of the mountain that the price is drawing, and then select the ones that you feel like the price touch base with in the past more than once, that you feel like it will pull back to it to rest and start climbing another mountain. So you pick few to be where you are willing to buy stocks when the price drop down to those support lines, and then start going up from there, making higher lows. After few higher lows, that give you a confirmation that maybe the price is done going down, is ready to start going up. You can purchase some share after one or two green bar that follow a higher pullback. And as we are analyzing CBRE with that strategy, we notice that it's far from where we want to buy. It reached a new high not long ago. It's pulling back, but even with that, is well away from where we want to buy. Therefore, it is not a buy today. And today is October 6, 2025. We are doing the stock analysis before the market open. So Friday, when the market closed, it closed on red. The price is red because the evening price was lower than the morning price when the market opened. The price dropped that day. So CBRE is not a buy today. The next one we'll analyze is CL. I like to take CL out of our watch list for 2026, but I'm not entirely sure yet. So as you can see arrows on this, we purchased multiple times in 2024 using short uptrend line swing trading strategy. And in 2025, we like to use long uptrend line swing trading strategy. We did purchase the arrows facing up shows where we purchased, and the one up facing down shows where we sold it. So we purchased it and sold it, but then we decided that it may not really be following it may not be comparable or compatible to our long uptrend line swing trading strategy, but maybe it was just on its way down, because as you can see, it's still going down, getting close to our trend line. So it could well be respecting that trend line to be its valley to pull back to, but it went up quite a bit and now it's pulling back to it. So maybe we might still keep it on our watch list to see if it's tradable, but it's getting close to it, making lower lows, but it's not there yet, and it's not showing us that it's getting ready to start going up yet. So Friday the price drop. So the next one we are going to analyze, CL is not a buy today. based on our long up to long swing trading strategy that we are using. CMG. So CMG. Okay. So CMG, we purchased it in 2024, paying a high price for it, as we purchased it after it reached a new high, but just was done with it. It pulled back and went up, and we sold it. So after we sold it, it pulled back, and we start making, you know, higher lows there, and we bought it again. But it was just pretty much done with that mountain, and then it continued to go down. So we got trapped in it again, and now is at the valley line that we like to buy at. So now that is at the valley line that we like to buy at, we are going to get closer to the support line to see what is going on there. As you can see, we are analyzing the chart without zooming yet. But now that this is close to the trend line we like to buy at, we are going to go close to it. And before we do that, we can compare how it behaved around that line when it touched base with it. So here it touched base with it twice before it start going up. It did it here as well, if not 3 times. So let me see, even here it didn't reach a new high at this point. So it reached a new high somewhere here. So when it touched base with it here, and we'll see 1, 2, 3, went up a little bit, pull back to it, 4, 5, before it was actually ready to start going up. So 5 times. So there is a chance that it could linger there, going up, pulling back to a few times before. So if we are looking at it here, we have a pull to a 1, went up a little bit, pull back to a twice, 3. So it's like, but those are just small though. If it can even count this as 1 time that it touched base with it, I can say 3 times. But anyway, so, and as you can see here, I'm not seeing, if I'm putting my mouse on the red bar, this is the lowest one, I will say this is low. So let's touch base with this. This one is lower than that one, and this one is lower than this one. So only this one is higher than this. So I will say, even though we have an uptrend here, we have a downtrend here. So it is there, but we are not going to buy it yet. Even though we purchase it higher up, I will want to buy it again. Now that is our entry. It was at the support line that we like to buy, but we wanted to have a confirmation that it's down, going down, before we buy. Although after we pay a higher price for it and we have it in our portfolio, we have not sold it yet. Even if we bought it where it is right now, it still be a lower price compared to the one we already have in the portfolio, if that makes sense. But just not getting too early, especially if you have some stocks that are well positioned for you to buy. If this is going to go up, come back to it, go up, come back to it 4, 5, 3 times or so, for the time frame you will be stuck in it before it's ready to start going up, you can allocate that toward another stocks that, you know, is on its way up, for instance. But in that sense, otherwise it is, you know, a personal choice. For a stock that you have been trading for a while, the way we trade this in 2024, buying it at this support line here, you know, it will be okay. If it decided to go down a little bit before going up, we'll just get stuck in it. But it won't really matter to me personally, just because you can see where I've purchased it that I have not sold it yet. It was right at the beginning of 2025 and I'm still in the trade. So if I purchase it right there, and it decided to go down a little bit. There is no other line that we trace down there, so it might go down a little bit and then go up. Sometimes they do that. It won't be any worse than buying it here and the prices run out at this point. Does that make sense? So those are things that it's not a rule but said that you have to follow the sell, but you'll analyze, you'll put things in context. So, but again, I'm not going to make any purchase just here. I'm just going to keep observing it to see, you know, what is doing there until I feel like, okay, it's down, going down. It's not going to go down any lower than that, but it might linger a little bit more here. So as I'm saving more money to have enough money in the account to purchase more, it will be doing its thing. So I can say, yeah, well, I will save money for it if I don't have money in the account to buy it yet, and just have a mark red on my spreadsheet so that I know that it's flagged. It's right there, and I will be keeping an eye on it until I can buy some more. It's highlighted because we purchase it. It is in our portfolio. So that is our entry point strategy. So now that we have it in our portfolio, we can use it as an example. And is here, if I'm not going to buy more, well, I won't do anything. I'll just be comparing where the price is, where I purchased it, to where I wanted to sell it next. And where I wanted to sell it next is going to be the next high, because it's an upward stocks. If we go to maximum monthly chart, you will see it is upward stocks. You can see where the price is at the right compared to at the left, the beginning. It's upward stocks. So when we go back to maximum daily chart, if I'm not going to buy more, I'm just going to hold on to what I purchased and just keep observing it. It'll go down to where you want it to go, rest a little bit, and then start going up, and it will reach the next new high, which is going to be higher than the peak here, for this to be posted somewhere there when it reach that new high. And from there I can decide if I wanted to sell it or not. And to sell it, I have two strategies that I'm going to be using, I'm going to be taking into consideration. One is to compare last time it reached a new high, which after it touched base with the support line is somewhere here. When it did that, it stayed a little bit, pull back and start going up. So from here, which is mid 2020, April 2023, it was all the way here before it was done, which was July 2024. So let's just say 1 year time frame that it climbed the mountain before it pulled back. So 1 year time frame. So from here, once it reached the new high, the first new high, when it surpassed this price here, from there I could estimate it to maybe continue climbing the mountain, going up and down, climbing the mountain for another 1 year before it's done. And I can decide to stay in the trade for 6 months from that point, or 8 months from that point, to accumulate some profits. That is one of the strategy to determine my SD plan. So, and it's because after this high here, it didn't just pull back to where, you know, to the valley line. Of course, it pulled back to start working on this support line that will support the upside wall of the mountain, but then it continued to go up. If it drop all the way down to the support line, then when it reached that peak, then I'll decide to just sell it, because it won't take long before it will pull back down again. So those are the decisions you could make based on the past. The second strategy will be to compare the price at the support line, which is $27, and the price when it reached that peak, which is $69, and calculate a ratio between the two, which is going to be 69 divided by 27. and that is 2.5. So it's like you'll double your money if you buy it at $27 a share and sold it for $69, for instance. So that is more than double your money. So in this case, I will say, okay, there is a ratio of 2.5. I mean, round it down. So, and then I will say, okay, so here is somewhere there, and the lowest price is 37. So I will take 2.5 times 37, and I will say, okay, so when it reach $92 or $90, I will sell it. So, and then I will have that 6 month, 8 month from the next high. That is another strategy to sell this, or to exit. And the second strategy is quantifying the exit point and saying $90 I will sell it, or $92 I will sell it. And not to overstay in the trade. When it's 2.5, we can just say maybe 2. So therefore 37, I believe that's what that was, times 2, we will say, okay, maybe when it's 74, we will sell it, you know, and just double our money. You won't be doubling it because you didn't buy it there, but you still have a good profit in it, if that makes sense. So having those two exit plan to see if you follow the first or the latter, which one comes first or which one comes last, whether it's 6 month or 8 month time frame after the first new high is show up, that you want to stay in the trade before you sell it, halfway through the, you know, the high trajectory, like, or quantify it, and you can just put that price in. Let's see, you can just note it down. For instance, here we can say that sell around $75 per share. You can just say ratio is 2.5. Yeah, 2.5. And but $75 is calculated based on 2, based on a ratio of 2. We can just put like $37 times 2. Just put notes that will make sense for you later when you are reading it. It makes sense. If later you are reading it does not make sense, you just, you know, update that notes. But you have some notes there, and I like to date my notes as well, so that I know it in some way. It tells me what I observe that time, because as the price is moving, my observation could change as well. But that is 2 strategies to exit the trade, and we talk about the strategy to enter as well, and that is pretty much, you know, our long uptrend line swing trading strategy that we are using. We don't use indicator. I started swing trading last year, and when I started, yeah, I used indicator a little bit, but then when I noticed that I can trade without them, I just took them off of my chart, and I just used arrows on the chart to just show where I purchased, where I sold, and I found those useful. So we can go and look for CMG that we purchased, and we have it here. It was in January that we purchased it, and we have not sold it yet. It's the sold session here, and we pay $58 for it. So, but yeah, that is the strategy we use, we don't like to sell at a loss. Therefore, if you purchase the stock and the price went up and you don't want to sell it at a loss, it's imperative for you to take your time to create your watch list of those stocks that are upward trending or upward stocks, so that you know that even though you buy high and the price went down, at some point it's going to go up again. So you just keep them in your portfolio until the price goes up, and then you can sell it. If we are looking at CMG, for instance, we purchased it somewhere there in July 2024. We held on to it when the price dropped. We didn't sell it at a loss, and when it reached somewhere here in December, 6 months later or so, we sold it for a small profit and got out. So, but those are personal choices. You might argue and say that money you could have used it in another trade and make profit instead of keeping it for that time frame, in this, and you will be right. But again, you could buy another stocks with that money and it will still, and if you do not purchase it right, you still it could still pull down on you as well. So therefore, knowing that that company is not going anywhere, it's not going to go bankrupt on you, and knowing that the stocks is fluctuating, it's going to go up, it's going to go down, you purchase it at a wrong spot, that's okay. It's just an investment. It might pay you some dividend, minuscule, but still something. And then you just keep it, and when it's profitable, you sell it. Unless you really need that money for something, there are different reasons why you want to sell a stock at a loss. But if you can just hold on to it because it's a good company to begin with, I don't try to analyze the financials of those companies. I just like to use the chart and do my analysis, and that's just what I do to swing trade. And I'm just looking at the dividend to see if there is a dividend we earned so far on it, but we did not. So it's not paying dividend, and most of those stocks don't, and the one that pay, they will pay just a smaller amount as well. But yeah, so thank you so much for watching. If you are just starting out, you like to start trading, I found swing trading to be a good trading strategy to use, and long uptrend and swing trading strategy allows you not to trade often, and trading long upward stocks, large cap upward stocks, it might be a good for a beginner because they do not fluctuate too quickly. So if you do not have time to analyze your chart on a daily basis, and there is one that is well positioned for you to buy, you can still get in. You can see that this touch base with the support line like 5 times. So if I purchase it somewhere here and you miss that entry, you come across a maybe somewhere here, you'll buy. Maybe you'll pay a little bit more price that I pay for it because it's upward going, but you still get in at the valley of the mountain. And when I will have been trapped in it for a while, maybe depend on, because I could still be negative in if it touch base with the support line, or I'll be positive because of the angle of the line. It all depends, but either way, I still be at the support line when you get in further, further in. So it just gives you time to make your decision. If you are hesitant to buy or if you are hesitant to sell, it just does not fluctuate too quickly for you to miss a big window of the decision making. So and once you are well comfortable with large cap, you can venture with mid cap, small cap, and see within each market capitalization stocks that are well comparable with the strategy you are using, and have a watch list of those stocks, and you just keep saving money to put in the account and buying them when they are well positioned for you to buy, and little by little you'll grow your account with the money you are adding to the account and from the profit you are generating from swing trading. Thank you so much for your time. We thank you very much for watching our videos. We thank you very much for all your comments, and we thank you very much all that subscribe to our channel. I'm Afiavi Liberman, creator of Liberman Consulting L.L.C YouTube channel and ninasoup.com, our blog. On our channel and on our blog, we share different ways you can save money and different ways you can make money to reach your financial independence, where you do not depend on an employer to provide for your family. And swing trading is one way to make money. Just start small and take your time to customize your strategy to meet who you are, your personality type, and your risk tolerance. And take your time to pick stocks that will be in your watch list, and those stocks are the stocks you are going to analyze all year around. You are going to buy from. You are not going to spend your energy looking for the hard stocks on the market for you to buy today, but you are just going to turn to your bank of stocks that you took time to filter and to create your list from. You have your master list, your shorter version that you can analyze within an hour, and you're just going to be analyzing those. And if a stock is now well behaving, it's not comparable to your strategy, you just take note of it, and at the end of the year you take it out and you go back to your master list and pull some stocks to replace those that you took out, and so forth, until over time you'll have a well curated watch list that works well with the strategy you are using, and you just trade from that list. And the reason why I like to do that is because that way you'll get familiar with those stocks that you just keep trading. And if you are going to learn to take some risk out of your comfort zone, you will be more comfortable taking those risks with those stocks that you are trading. For instance, I show you CMG that if I have money, I could just buy at the support line there, knowing that it might linger there for a while. I just know that I'll be paying a lower price for it compared to the one that I pay up higher up. But if I don't have money to buy it right away, I wanted to keep saving money to buy more shares, then I will just keep observing it to see how it's moving, knowing that it could stay around that support line for a while, giving me plenty of time to save money to buy more share of it, so that when I buy it there compared to the one that I buy higher price, the average of those two will lower the price that I pay for per share. One second, because I'm going to wait until it reaches a new high before I sell it, I will have more profit if I buy some at a lower price compared to where I purchased right now. So those are things that you have to take into consideration. And sometimes, depending on how much I pay for it right now, how many shares that I have, I'm having decided to double those shares if I want to. That way I purchase more share at a lower price compared to how many I purchase at a higher price, giving me more leverage, even more. But those are just things that you just have to work through and learn experience from it to see what is working, what is not working. Thank you so much for your time. For more of our swing trading tips and and strategies, will you please check the playlist list in the description of this video. Thank you.